Welcome to After Hours at Traders Post for March 7th, 2025. I'm Tom Hartman, your once and future king, joined by Peter, sitting in for Mike Christensen. Don't worry, while Peter is less knowledgeable than Mike, he's also less handsome. After Hours is your go to market commentary show powered by Traders Post, the best automated trading platform in the universe. But we'll get to that later. Tonight, we're covering the biggest story shaking the markets: Bitcoin as a government reserve, Trump's economic warpath, and a market bottom that could set up for a face melting rally. The bell has rung, so let's get trading. Peter, how's it going?
Oh, it's going great here on After Hours. I'm looking forward to these topics. Can't wait to up my knowledge a bit. Not going to be able to do what Mike can do, but I can make sure that Tom is taken down a notch, right? There are things that I know about Tom that you don't know about Tom. So as we watch this, I'm going to look for opportunities to spill some beans to let you know a bit about Tom's character and the demons that haunt him in his trading journey. But I'm very happy to be here.
The thread that always permeates all these different episodes while when I rewatch them is that I like people, they don't necessarily know if I'm like pro empire or against empire, pro expansion against expansion, pro status quo against status quo, and that's the way I like it. Right, we're here about using the news in order to make money, and that's the thing that matters the most to me. Imagine being there and Rome is falling, but you made 300% on a trade because of it. You can't stop it from happening, but you might as well profit. All right. So, first up, Bitcoin as a strategic reserve. U.S. Treasury officials and top investors are talking about it. But does this mean real adoption, or is it just another narrative? My feed's been full with this.
I'll
What I
take
love
this
is
one. I think that the Bitcoin.
so there's three camps, right? There's the people who are anti crypto altogether, and they're just like, this is totally ridiculous. The Peter Schiffs of the world. I should have a shift counter over here. Every time I mention him, shift goes up. They're just like, this is absolutely crazy, and just another sign that the administration, although overwhelmingly elected by the American public, is completely clueless. All right. Then you have the people who are Bitcoin maxis, and they're just thrilled that Bitcoin is going to be purchased by, or that
Well, it's not going
the
to be
government
purchased,
is sanctioning
right?
the idea of Bitcoin, and that and they see this as a step in the whole game theory thing that Bitcoin was always going to take over the world, and of course, um, America's going to be yet another casualty in the currency war. And then you have the people who are happy about the altcoins being mentioned, right? The altcoins, the Solanas, the Ethereums, the XRPs, the Cardano being mentioned in the same breath as Bitcoin, alongside with the strategic reserve.
It's beautiful.
And they're very happy about that. But the Bitcoin people, they think, oh my God,
What
the
are these?
altcoin is a Ponzi scheme scam. And how can you even taint the Bitcoin reserve by even mentioning anything like that. It's like having a mistress for your wife. They're like, that's for something, if you're going to do at all, it's in the red light district, quiet in the love hotel, and you never mention it. Right? You keep your second family somewhere else. And then the people who are completely against crypto and go, you're all terrible. You're all horrible. It's
That's right.
ridiculous.
And
But
then there's
what's
people who are happy with everything, right? Bullish all the way. Happy for Bitcoin, happy for the alts, happy for the
no.
industry.
If you hold altcoins that are going up faster and harder than Bitcoin, whatever happiness you have with Bitcoin, that's just the cost of being in the game.
Yeah, but I'm not happy
The altcoins
because
do
the
that.
price goes up, number go up. I'm not a crypto zombie. I'm happy because of the adoption of the technology. That's what you talk about. You like the tech and how it can actually be useful and help the future.
Well, that's why I like that. That's why I like while the altcoins were mentioned, because of this idea that there are different technologies, different qualities to these different blockchains, and maybe I don't think it should be like in a strategic reserve. I sort of think that's like way in a totally different direction than what I need it to be. Um, it's like when platinum is used for your wedding ring. It's like, okay, I mean, I like platinum for a bunch of stuff. I never really thought about it as a wedding ring, but okay, fine, if you like it for that, uh, fine by me. So but the idea that we were for years worried about, hey, what's going on with the crypto space? What are the regulations? Does anyone even care? Should we make money on it? How do we tax it? This whole thing. Now the conversation is really stirred up and going full force. So I'm really thrilled about that. But let's cut to today was the I forget what they call it, the White House Crypto Summit, where the CEOs and the Michael Saylors of the world went to go meet with, I don't know, Scott Bessent, Treasury Secretary, Donald Trump, who knows, in order to talk about
David Sachs was in there?
of course, Czar David Sachs. I think he was there.
Yeah,
In fact,
crypto
let's
czar.
just go ahead and cut to one of his videos over here where he explains a few hours ago what the White House meeting was all about. 1 second.
Public and investors why you need a Bitcoin reserve at all.
It's too loud.
Well, good to be here. I mean, the reason why we need a Bitcoin reserve is that the federal government already owns some. In fact, it obtained around 400,000 Bitcoin over the past decade through criminal and civil forfeitures and seizures. And so the government has to have a strategy for how it deals with this. In the past, the strategy has been simply to sell it, in an ad hoc way, almost willy-nilly. And that cost American taxpayers something like $17 billion in lost value. So we want to have a long-term strategy to maximize the value of these holdings. And we've decided that Bitcoin is scarce, it's valuable, and that it's strategic for the United States to hold on to this as a long-term reserve asset. So that's the...
My favorite thing about this is that means that the Bitcoin reserve, the government's entry into crypto, starts with crime.
Ain't that
It's
always?
crime
That's
and
the way the
fraud
world works.
and seizures and penalties that caused Bitcoin to be a part of this whole thing, which I find to be pretty funny.
Well, the coming off of the gold standard, wasn't that a bit of a crime? Stealing people's gold?
Okay. That allowed for the unlimited expansion of the U.S. economy that caused the production of the greatest empire the world has ever seen. If there was any problem at all with getting off the gold standard, is that they didn't do it before. Okay. Okay.
Okay,
So
so
that
you're
for
pro
the AI
empire.
overlords. We're good. All right. So next up, so he then mentions this is something I wanted to know. Like, why were the altcoins mentioned inside of the tweet from Donald Trump the other day? And he touches on here.
Just going into what's in the holding of the US government, going back to what President Trump mentioned over the weekend, talking of Ripple, Solana, other alternative coins that people are wondering whether they're going to be included in this stockpile. Will they? Does the US own them? Why mention them by the president?
Well, the president just mentioned the top 5 cryptocurrencies by market cap. So I think people are just reading into this a little bit too much. He just mentioned the top 5. In terms of what we'll actually have, again, we have to do the accounting. We're not sure, sitting here today, whether the federal government owns any of these alternative cryptocurrencies. We know it owns Bitcoin. I believe it owns some Ethereum. I'm not sure about the other ones. This is why we have to do the accounting, is that, to be honest, no one's been able to give us a straight answer yet in terms of what the federal government owns. And this is part of the problem, is that we've never really had a digital asset strategy before. And this is why we've, missed out on accumulating a lot of value for the American people.
All right. So I love that because this means, actually, let me just turn this off for a second. This means that we're not anywhere close. We're not anywhere close to the government buying Bitcoin or any altcoins. We're not even close. They don't even know how much they have, where it is in the government, who owns it. And so all they're doing at the moment, I think we'll see later on, Scott Bessent talks about this. Scott, I call him Scott. It's Treasury Secretary Bessent. He talks about this like we're just stopping the selling at the moment. Like we're selling a bunch of this crypto, and Sacks just says $17 billion worth of value was lost because had they just held on to those 250,000 Bitcoins, they would have had tons of money right now, and who knows what they could have done with that money. All right, so stop selling that. So
Isn't that a clue that they're going to want to buy if that's the case?
Right, exactly. So the idea here is that this is like step one in this entire process. And so the price had jumped up on Bitcoin the day the tweet went out. It jumped up, and I remember people were coming out of the woodwork messaging me, being like, "Oh my god, I got to get in! I want to go max long Bitcoin. This is going to be amazing. They're doing the White House Summit. It's going to go gangbusters. They're going to be buying money hand over fist. If just 1% of the government spending goes into Bitcoin, and blah 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 blah." So that's not happening, and we've seen this. We've seen this even in, let's say, other liquidity that gets added to the market. When the Fed cuts and raises rates, when there's repo operations, when there's quantitative easing or whatever, it's not today the spigots get turned on. Sometimes it's months to a year and a half, 2 years before we actually feel the full effects of it, right? We only saw inflation after, what is it, a year and a half, 2 years after the COVID crisis that caused an entire problem. And so this means set your alarm for months from now, a year from now, 2 years from now, or maybe in Trump land, let's call it 6 months from now, before you're even seeing any conversation of the strategy for buying any Bitcoin.
Well, my thought when I first saw the tweet, and then when I thought about it, was I'll know this is serious when there is another piece of information. How much Bitcoin does Trump own? If I didn't hear that Trump bought a bunch of Bitcoin and now he's rich with crypto. I just heard that he did, this tweet and that we're going to make a strategic reserve asset. So I thought if this isn't coupled with Donald Trump owning a ton of crypto, then I don't think anything major is happening just yet.
Well, this is what I don't understand. There's some of the conversation going around here. In fact, even at the interview with David Sacks, they asked him about the conflict of interest that the people who are managing this would have any crypto, pumping their own bags. And Sacks says, "Well, I sold all my crypto. I don't know what anyone else is doing, but we have there's an ethics committee within the government that tries to make sure that these things are supervised. And so, we don't know what the rule is, but that's what they're saying. But that sort of goes contrary to the idea of the strategic reserve. When there's a strategic reserve of oil, they don't go, okay, now you can't have oil. When there's a strategic reserve of gold, they don't go, okay, now you can't own gold. Strategic reserve of currencies, you can. So if this is a strategic reserve, it means that they think it's valuable to have it, and that it needs to be done in order for the national security or economic security of the nation. So then, in fact, if anything, I want them to own the asset so that they also benefit if it goes well. So I find that to be a little bit strange. That
You think there's go ahead.
Well, this is not like insider trading any more than the Treasury having dollars in the Treasury General account means that you can't hold dollars.
Yeah, like if David Sack came in and said, "I got rid of all my gold. I don't want there to be a conflict of interest," you'd be like, "That's kind of strange. You're getting rid of gold."
Weird. So I don't get that. What is it that we think this thing is? So I think that's funny. But as far as later on in the interview, Sacks talks about the idea of the meme coin and Trump's meme coin and the Melania coin and all that. And I believe he states, hey, as long from his perspective, as long as the meme coin is declared as this is just for fun. This is just he calls it a collector's item. This is just a collector's item. This is just for fun. It's not for profit. Then there shouldn't be any problem with it. You should be able to release as many meme coins as you want.
I agree. You agree with that?
Yeah, if Donald Trump wanted to make a Hummel figurine set out of his likeness, go ahead and do that. What do I care? Go ahead and make whatever you want. But if it's marketed as buy this meme coin as an investment and all that, I think that's problematic. And by making it, declaring them securities in any way, you actually open up that idea. People go, well, this is security. I have to jump through all these KYC hoops and all these different regulations in order to buy it. That means it actually is an investment. It supports the idea of the person who puts it out that this actually is an investment. No, let it be known that this is a crazy Wild West casino gambling thing, and have at it. Now, the last thing I want to say on it is that actually not the last thing I want to say. I want to talk about a whole sheet of bullet points here about this particular point. But just to bring up Cardano again, because just like Peter Schiff, I have to talk about Cardano every episode. And that's the reason why Charles Hoskinson wasn't invited to the White House crypto gathering thing is because the mention of ADA and XRP and Ethereum and all that was just like, because Donald Trump Googled coin market cap and saw the first 5. And
So Cardano's in top 5?
Cardano's been in the top 10 like forever now.
Yeah, but is it in the top 5? That's what Sacks says. Sacks says the president mentioned the top 5. I didn't know XRP and ADA were in the top 5. I know Solana.
Cap, yeah,
oh.
Absolutely.
But it's a dead garbage zombie train.
Peter, that's not what the segment is about, okay?
I'm trying to trigger you.
All right, so I'll move off to Scott Bessent. Now, this interview for Scott Bessent on CNBC, Treasury Secretary Scott Bessent, sorry, Scotty, just what I call him, I thought was one of the best interviews I've ever seen with the Treasury Secretary. In fact, it's sort of strange, like how honest he's been and open and knowledgeable about the subject. I'm used to so much more cagey information, even from the wonkiest officials. And so at the end of this, we're going to play this part, and at the end of it, he says something about crypto. Let me just pull it up. All right.
Revenue neutral way, we would. Number one, we're a revenue neutral way, we would. Number one, were you a proponent for the reserve? And 2, is there a way to buy Bitcoin, not just acquire it through, I don't know, however we've gotten these $17 billion worth at this point?
Yeah, so Joe, I am a big proponent of the U.S. taking the worldwide lead in crypto. I think we have to bring it onshore and they use our best practices and regulation. I think that the Bitcoin reserve, before you can accumulate it, you have to stop selling it. So what we have now is from a seized asset pool, and I wasn't there when it happened, but I believe what happened was about 500 million of Bitcoin was seized, half of it was sold, and what we have now that, say it's over 10 billion, 10, 12 billion, that's all through appreciation. So the first thing to do is to stop the selling. So we are going to, after the victims are paid and all of that, any seized assets will go into this reserve, and then we'll see what the way forward is for more acquisitions for the reserves. And we're starting with Bitcoin, but it's an overall crypto reserve.
Right. So how do you think about bonds?
We're starting with Bitcoin, but it's an overall crypto reserve. And we're starting with the stop selling, and then we're going to think about acquiring.
I mean, that's a smart way to do it.
Yeah. I mean, they don't even have an accounting system for it. They don't even know how much they have. So I think this is great. And it makes it very clear that purchasing crypto by government entities makes a lot of sense. Now, because of this is happening, game theory steps in. And if you are a foreign nation and you're like, they're doing a strategic reserve for Bitcoin, what do you think other nations might decide to do? They might just be like, okay, well then let's start acquiring Bitcoin. If
game theory
eventually will do this, why do we want to wait around and wait for that to happen? And so over here, there's a nice.
Talking to Brian Armstrong last night ahead of this summit today, and
way too loud. Way too loud.
Can't hear it.
He's one of the members who's been advising the Trump transition team since the campaign trail, and he made the point that he thinks a lot of countries are going to follow. I know of already Middle Eastern
Sorry, Tom, can you
countries,
start
Gulf
the
states
video
that have
over?
been looking into a Bitcoin.
Yeah.
Talking to Brian Armstrong last night ahead of this summit today, and he's one of the members who's been advising the Trump transition team since the campaign trail, and he made the point that he thinks a lot of countries are going to follow. I know of already Middle Eastern countries, Gulf states that have been looking into a Bitcoin buying strategy. There's also reportedly conversations within the Chinese government to look to follow suit if the government in the U.S. makes this move to roll out a purchase plan.
But there is no purchase plan.
Yeah, exactly. Well, I mean, if you have a strategic Bitcoin reserve, China used to be one of the epicenters for Bitcoin mining. It's very easy for them. They have all of this hydropower, and so they already have all the facilities, and they banned it a couple years ago, but it takes nothing to turn it back on. And then, I mean, similar to Iran evading sanctions by just mining Bitcoin, they already have it on hand.
Right, but if
All right, so the Bitcoin wars begin, right? There's countries all around the world that already have Bitcoin. So United States has 9 billion, UK has 5 billion, Ukraine has 4 billion, Bhutan has 1 billion, China has 17 billion. And if we're going to start now with the Bitcoin wars, well, the path to $1 million Bitcoin doesn't seem so crazy after all. It's not
Isn't
like
that
Trump's not going to be president anymore and all of a sudden everyone's going to sell their Bitcoin.
well, I mean, people are selling their Teslas. If it becomes ugly enough, people will get rid of things for virtue signaling. But okay, I like this strategy. If they hold this Bitcoin and they create an environment where Bitcoin goes up to $1 million plus per coin, isn't this a far less controversial, more welcoming way for him to deal with their budget?
Right. So
Because
that's the idea here.
if they're going to be cutting all the hair on fire, cutting USAID and yada yada yada, and I got to cut this, I got to cut that, people are going to babies are going to be starving. Okay, well, put your focus on crypto, acquire more crypto. The crypto you have, if it goes up, then your crypto's worth 200 billion, it's worth 500 billion, it's worth $1 trillion.
Yeah, so that's the idea here. So the strategic element of it, right? You can imagine that if it's why is there a stockpile of oil and steel or whatever from the government, and they call it a strategic reserve, is because if we go to war, we want to be able to have enough in order to prosecute this war. We need it for a rainy day, but we need it as a tool, as a item in our kit in order to attack or to defend. And so you can imagine that economically, if for some reason they put into policies something that causes a rise in Bitcoin, and now they have this surplus and they can sell some of that in order to finance certain things or to pay down the debt or deficit. Oh, sorry, pay down the debt. Well, then that's strategic, right? And the causing Bitcoin to rise up, having policies to cause it to rise up, they do that in order to make oil go up. Like OPEC has policies to make oil go up in order to get more money for their nation in order to pay for their things.
Right.
So why not have policies to make Bitcoin go up in order to do it? The difference with Bitcoin is that you and I can participate.
That's the wonderful thing about this.
It's this backdoor way of being like, hey, if we all do wait a second, if we all just buy this and then hold it, and then we're all doing it, it goes up, and then it could pay down our dollar debts, and we have Bitcoin as a thing. And fine, you might transition to a system where then, okay, I'll just hold Bitcoin will be my asset, and I'm just trying to get away from all my dollar denominated debt and moving towards the system. It becomes this transitory phase where we can actually looks like there might be a way out of the massive debt that the world has by having this other asset that depreciates in price.
Well, there are multiple ways out of the debt when you consider not only crypto, but the immense boost to productivity we're going to get with AI and robotics. Like we are, from what I can tell, unless something stupid happens, we're definitely going to be dealing with this debt problem in a way that it will be unimaginable. I think essentially overnight, this debt issue will be completely wiped out because the progress that we're making, just what I've seen in the past 2 years, is incredible. If you combine crypto and AI and robotics together, because the AI agents need a digital currency in order to be more effective. they can't use the traditional, or they can't only use the traditional payment rails. Crypto is faster, more efficient, moves at the speed of light. Look up Michael Saylor, you'll find out how crypto is the second coming, Bitcoin specifically. Then we're going to be dealing, this debt will be like, we might in our lifetime not even be thinking about the debt anymore. There'll be just so much wealth available
That's right.
that the conversation will shift from the budget and dealing with the debt to what do we
Surplus.
do with all this money? What do we do with all this surplus, all this productivity? Where should we give our focus? I think, Trump, if you're listening, you need to be the crypto president. All right, I understand all the things you're doing about, DEI and whatever, foreign aid and all the stuff that you want, but crypto is the way to go, I think. Somebody get this, clip this, send this over to Trump, and let Peter be a part of saving the world. But what do you think? Is this pie in the sky? I've heard people talk about it, but I don't know if it's justified. Can crypto really erase the debt?
Yes, I mean it sort of has airs of $1 trillion coin, just print the $1 trillion coin and pay down the debt. But it's different because just because Bitcoin goes up to $1 million a coin, $10 million a coin, whatever it is, doesn't mean that the government can dump the entire amount on the market. Like
Right.
just like Trump coin, you'll destroy the liquidity of it. There'll be too much selling pressure, and they would never be able to get filled. So just because on the books it's worth whatever billion, $17 billion right now, doesn't mean they could just press a button and get 17 billion out of it.
That's
Right?
like when people say, "Oh, Elon Musk could solve world hunger or whatever if he just took $50 billion into this." You're like, no, he doesn't have $50 billion sitting in the bank. He starts selling Tesla. The value of these companies are going to start going down pretty quick. Something like
Exactly.
that.
But used as collateral, used in selling judiciously of selling Bitcoin judiciously in order to use the money for certain things could be obscenely beneficial. But we'll see. We'll see what the flows are like. This sort of like starts off the gates, like the floodgates can start opening up. And like I said, you give yourself 2 years of this, and then some countries are going to start having these plans to actually buy Bitcoin, and then a bunch of the coins are going to be locked away, so almost like burn in Bitcoin, and then you have this price appreciation. And so, as far as the trade is concerned, now it's really silly not to have any Bitcoin.
Oh yeah, 100%. I actually find it kind of crazy. I don't understand why the government doesn't just take $100 billion and buy Bitcoin. I mean, they waste, the amount of waste in the government is astronomical. Take 20 billion, 30 billion, 50 billion, just buy some Bitcoin. Like, why they have, did they say $17 billion worth of Bitcoin?
17, yeah, $9 billion left right now.
It's such a small amount. Why don't they just have a lot more? Just buy $50 billion more Bitcoin. Is that
Well, for people
possible?
like you and I, it makes sense. But then they don't even know where the Bitcoin is. So they're not even at the point where they can buy it. They're not sitting there
What?
with a ledger device, signing Bitcoin transactions.
Yeah, I know, but get Michael Saylor or whoever, David Sacks, and
That's what they're
get to
doing.
figure out. I just don't understand why they haven't already done it.
Peter, saw what the last administration was like. They had other concerns.
Is this part of why? Is this part of the? Is a symptom of the geriatric environment that the government is in, and all these old people? Like,
No, look, what I've wanted governments to start jumping in on Bitcoin was a 4,000. No, if that's the kind of government I had, we'd be like, what's going
no,
on
no,
here?
it doesn't have to be 4,000. I just mean, right now. Why did? What's the? What is the? Isn't 50 billion pocket change for the U.S. government?
No,
Well, I mean, they're sending out
billion.
billions of
No,
dollars.
pocket change is millions, not billions.
Tom, come on.
No,
You're telling me they can't put $20 billion into Bitcoin easy and it won't even affect anything?
what do you mean? Like someone's not gonna be waiting around for the $20 billion?
Yeah, nobody in the government's going to be like, oh my God, we
No,
almost
no,
made our
they
budget, but
can't.
we're missing.
No, I'm saying that the problem is actually buying it.
Just, oh,
There's no system for it.
oh, I see. They can't just like go to Coinbase and buy
Exactly.
$20
Can you imagine
billion.
they're sending it, to the wrong address? I just lost 10 billion.
So you think they
Why'd you just
want?
send a $1 billion test transaction? Why'd you have to send all 20 billion?
Somebody get Kid Boga on this. Look, do you think they would want to do it? It's just technically not possible?
Yeah, I think they will do it. They have to.
And I guess they wouldn't announce that they would do it until they can buy it, because you don't want to make the price go up before you own it.
No, I
Okay.
don't think the government cares the price of Bitcoin.
What do you mean? If the government says we're going to go on an all-out spending spree, we're going to buy 50 billion, you don't think the price of Bitcoin is going to shoot up?
No.
What?
No, they'll buy hammers for $1,000. They don't care what price it is. They just want to have it. There's 21 million, and they want to have it.
I see.
Yeah.
One more thing I'm worried about with this crypto thing. Okay, do you think they'll be incentivized to acquire more Bitcoin from people? Do you think people who own a lot of
No.
Bitcoin will now become targets, especially if they're abroad?
No.
Like you take out some type of...
No, they have the unlimited money printing press. They can just buy as much Bitcoin as they want. Other countries might do that, but who knows? All right. Next, is Trump planning a recession? New tariffs, tax policy shifts, and economic strategy all point towards a deliberate slowdown. Is this by design? Peter, what if I were to tell you that playing as day, the Trump administration, and all the ways that matter have been telling everybody we're going to have a recession. We're going to do it. We're going to do it hard. We're going to do it now, and it needs to be done. Ron Paul style.
No, there's no way they're doing that.
Yes. So it looks 100% like that's what they're doing.
What?
Yeah. So I'm going to...
Trump doesn't want to preside over a weak economy. How long will this recession last for?
A year? 2 years?
What? He only has 2 years to do what he wants to do in office.
Well, let me just paint the scene over here. Let me show you the evidence of it, because we need recessions. People talk about recessions like it's a bad thing. The reason we have recessions is because we have expansionary periods, and you guys are juicing up the system in order to have expansionary periods, so then you can have a recession. If you use your $10,000 credit card in order to go on a trip to Maui, and you come back home, well, now you're going to have to cut some corners in order to pay off your $10,000 debt. Expansion, contraction.
Not
Expansion,
if you print the
contraction.
money. You said if you can print the money, you don't care.
That does not change. In the recession, it's a recession because it's the aggregate of the population, right? So they printed the money, but not everybody gets that. And so the business who hired too many people now, and it's not, he has too many people to meet the sales demands that he has, well, now has to start selling off people or firing people because their labor is the highest line item on their books. And so as they start doing that, other people start saying, hey, they're doing that over here. I also have the same sort of problem. Let me start selling too. More people end up inside of the labor pool, and we end up inside of an economic contraction because those people who have been fired have less money to buy things, and you have less money that's flowing, blah, blah, blah. All the way down to get to the point where they fired everyone that they're going to fire. And then we have this plateau period, and then people start taking a little bit more risk. They start succeeding, and then other people see that. They start hiring more people. More money starts flowing inside the economy, and we get the sine curve up. So that's just the business cycle. And so even when they're pumping money within the system, you get this ramp up within the business cycle. But eventually, there's no more people to buy. You already bought all the cars. You already bought all the things, and then you're gonna have to have this economic contraction.
And you're saying that's a good thing?
It's natural. It just happens. Well, that happens naturally anyway.
Yeah, but is it painful?
Well, it's painful because when they goose up the system, when they introduce money into this cyclical system, they expand the top end of the range. And so the bottom of the range is proportional to how high you were for how long you were. So the longer you have your credit card debt, the more you've built up on it, the more you spent on it, the more you're going to have to spend time paying it off.
So
now,
why
if
goose
that
it up at
money
all?
is used in a productive way, if it's not a trip to Maui, but instead it's to start a new business or whatever, like when you take out a loan from a bank and it generates productivity and you end up with more money incoming than you did before you did this, well, then you pay that back faster and then you don't have the same economic contraction. But that's not the way money has been spent by the governments in the last two turnings.
Is that the way they intended it when they first set up the Federal Reserve? That they were going to be responsible with where their money went? It would goose productivity and ease these downturns?
Well, the Federal Reserve, its mandate is employment and prices, not necessarily growth within the economy. They do talk about that, but that's not their mandate. They don't succeed or fail whether there's growth. They just want to make sure that the volatility of prices and of employment is not high. So, okay, I'm making the claim here that Trump wants a recession. I'm not the only one. Ken Carson is the one who's been introduced this idea to a lot of people, and other people have picked up on it. But it's not something I'm hearing a lot in the news. Like, hey, you guys are going to cause a recession. Like, that's your goal here. And so let's just take a look at a few pieces of evidence.
I'm finding it
Okay,
hard to
start-
believe Trump wants a recession. I'm finding it. This is one of the craziest claims I've ever heard.
I think he absolutely does. All right, let's start first with the strong dollar.
Very strong on that. Then there's bilateral trading relationships, and is the dollar strong or weak on that? And is it strong because of U.S. fundamentals? And I can tell you, we are committed. This administration, President Trump, are committed to the policies that will lead to a strong dollar. If we bring back more manufacturing, if we have cheap energy, good tax policy, deregulate, we will end up with a strong dollar. But what is unacceptable is in a bilateral relationship, other countries trying to weaken their currency. And so we are against the currency manipulation on a bilateral basis, but globally, the strong dollar is very important. We will continue as a reserve asset, and I think anyone who has an inclination that this administration thinks differently on that's wrong.
As
All
far
right, I missed the first part over here. I just wanted to get where he actually asked the question. Here it is.
a weak dollar would really I called it a radical departure. Maybe it's not really a radical departure. I want to talk about the dollar and wonder whether there's the slightest crack in what we've had from every Treasury Secretary. I mean, we always ask them the same thing. Over the years, I've been here so long, been through so many Treasury Secretaries. I've never heard a Treasury Secretary say that they're not for a strong dollar. But a weak dollar would really be an answer to a lot of what you're talking about here in terms of trade deficits, in terms of, you know what a weaker dollar does for future obligations that we have with 37 trillion in debt. That makes it a little easier. Lower interest rates implies probably a weaker dollar. Would you accommodate a weaker dollar at all? Is there any motivation at all to let that happen? Or
All right, so he starts off that idea there with, is my mic okay here, Peter?
Yep.
Yeah, so he starts off this idea, no Treasury Secretary ever says that we want a weaker dollar. We always say have a stronger dollar. But a weaker dollar would go a long way in order to satisfy all the things you're talking about, in order to try to lower inflation, well, not lower inflation, but lower debt servicing, increase liquidity, a bunch of things that are good for the low dollar. And what does Scott say after that? His answer is, we want a strong dollar. We want a strong dollar. But then he qualifies it. He says a strong dollar, there are three components to the strong dollar. There's a strong dollar because there's productivity within the nation, and it's strong in that sense, that it's a dollar that people would want. It's a strong dollar because foreign nations are printing their currency, so lowering the value of their dollar, which is causing the increase of the dollar. And then there's the trade dollar, the trade weighted dollar, that is how much goods can be bought and for this currency versus another currency. There's a trade weighted dollar. And he goes, what we want is the domestically strong dollar. We don't want the dollar to be strong because of an imbalance, of currency imbalance.
Because that's fake.
So,
Or manipulated.
well, it's not fake. It's just manipulated. It's other people printed their currency in order to get more of yours. So yeah, your dollar is higher versus theirs, but they're manipulating the currency in order to get an economic advantage on you. Now they can get more of your stuff because they're printing their dollars in order to get the things that you have. So it could be a weakness, and it causes deflation, disinflation and deflation within the United States economy because the dollar keeps going up, and so even though they can buy more goods outside because everyone else's currency is weaker, internally it's harder and harder and harder to get by. Your dollar is so strong that it's hard to get it within your own nation, and it causes more divide and social upheaval and all that sort of thing.
Why is it harder to get within your own nation? Because people prefer to spend their money abroad?
Well, the dollar is high because it's hard to get. Like, the reason why it's high is that you have to bid more in order to get it. And so the ability to acquire capital, to get loans in order to start new projects or to spin up new businesses, all these activities become difficult because it's harder to get dollars.
I see.
It's sort of like the opposite of inflation, where the dollars are so abundant that they become less, not as worthwhile, which is the problem that the countries, when they print the currency that they have inflation internally, but they can then buy more things, more foreign things, at least for the duration that they're printing. And so both deflation and inflation are bad, but for different reasons. And so he's saying over here, Scott is saying that we want the dollar to be strong, but when we say strong, what everyone normally means is strong versus other currencies. That's what we all mean by strong dollar. How many Canadian dollars can you buy with one American dollar? How many Japanese yen can you buy with one American dollar? That's what we all mean. But he's saying we want a strong dollar, but we want it to be strong like domestically, because we have great productivity locally. Well, my friend, Triffin's dilemma means you can't have that. Like, normally you can't have that.
Because they're the reserve asset.
Exactly. The reserve, world reserve currency. I'm not going to go through the whole thing. We have a video on Triffin's dilemma, but essentially the country that issues the world reserve currency has a choice to make. You either supply dollars to the world, and at the expense of your own nation's economic and social cohesion, or you increase the social and economic cohesion at the expense of the rest of the world. And so he's saying we're going to do the latter. We're
So
going
what
to put
about
on tariffs, we're going to fix trade deficits, we're going to make a strong dollar domestically, we're going to bring back manufacturing, we're going to close our borders, all that sort of thing. We're going to make ourselves strong, and the rest of the world is like, yeah, but we need our dollars, though.
So can you still be the reserve asset if you do that?
Not for long. Not forever.
All right. But you could do that and then transition to Bitcoin as the reserve asset.
Sure, but I don't think that'll work on its own. That's like another scheme. Because if they do that, then they're no longer the world reserve asset.
But they still have all the guns.
Not enough. So what you need to do is, if I were running the economic system in the United States,
Tom, what would you do if you were running the economic system in the United States?
I'm glad you asked, Peter. So what I would be doing is, understanding that I have this printing press, I would make sure that when we're printing, it's in order to get more dollars, that where it affects us is to cause more productivity. I would be like, we're printed dollars, but everything's got to generate productivity. Every dollar printed has to generate more than $1 worth of return. And if that's not the case, then we've got to change what's going on over there. With the idea of exporting dollars. So basically, I would have a few years where I'm focusing domestically to get up to positive productivity, positive output, at the expense of the rest of the world, with the expectation that we're going to switch afterwards, and we're going to favor the rest of the world until the productivity goes down to almost zero, and then we're going to switch back again and go the other way.
So you're saying if you create expectations that people can count on, then they can plan for these movements. That's and right. It won't be as disruptive as if they just didn't.
Which is what the central banks do, right? The idea is that they're forward guiding. They're letting you know ahead of time, hey, this is the sort of things we're going to be doing in the future. So plan accordingly, and the markets adjust, and we have that. We can plan. Even if they say we're going to cut rates to zero, you can plan for that. If they say we're going to raise rates 0.25%, or the expectation we raise rates 25 basis points every meeting, well, you can plan for that. It's the uncertainty that's the problem.
You said there were three reasons for the dollar, three ways for the dollar to be strong. One is domestically, you're strong domestically. Second is the relative trade, relative currencies. And the third way was
trade weighted.
Trade weighted. Isn't that already the case, that it's trade weighted?
Well, there's always a trade weighted currency, those trade weighted dollar that's being that's floating around. And what we're seeing now is that Donald Trump wants to reduce the trade deficits with around the world. So I actually, the reason I was bringing all that, I wanted to bring this up on the screen. They could say all they want. I mean, I care about what actually shows up on the friggin' charts. All right, that's what I care about. And what do we see with the dollar? Just like Mike and I were talking about for weeks, the dollar has plummeted 5%. A 5% move in a currency is pretty gosh darn significant. And you'll remember on previous episodes, Mike and I were talking about that the last time Trump was president, the dollar came down.
Which is good.
Well, it adds liquidity, so it can be good in some way. This is not the trade weighted dollar. We're looking at the DXY, so it's versus other currencies.
I see.
And so when it goes down, the gap when the dollar goes down, the other currencies go up. So the gap between the two.
So they don't like that. the other currencies don't like that.
Right. So if you take a look over here at I don't know if it's a little bit too crazy, but the green one is the United States, and then these other ones are other nations' currencies. And so you can see that they're inversely correlated, right? When this goes up, this goes down. When this goes down, this goes up. That sort of thing. And now we're headed down, and these guys are coming up. And so you reduce the discrepancy between the different nations, which correlates with the business cycle. And so what happens in the scenario when the dollar goes down is that it means that liquidity in the future. Remember, I was saying in the previous segment that there's a delay between the government action and then how it shows up in the economy. Sometimes it could be up to 2 years delay. Well, we're at the beginning of that. We're at the beginning of, hey, the dollar's coming down. That means later on, sometime on like starting April, liquidity is going to start juicing up. Okay?
That's
Which
bullish
means
crypto.
you sort of want a recessionary period. You want as deep of a recessionary period before you get to that point. You because if you're going to have the pain, if you're going to have the pain of a contraction, get it over with as soon as you can now. And we're seeing that with bond yields, long-term bond yields are coming down. The stock market's down 7%. Bitcoin is down off its highs. Victoria's Secret stock is down 60% from the high. Nvidia is down 20-30%. Stocks are just rolling over. So, all right, that's just a couple of the beginning points. I'm going to continue on here with Scott Bessent, who, remember, he's a spokesman for the government. They're all spokesmen for the government, but you don't normally hear the spokesman being this transparent. So let me just play the next segment over here.
And just a reminder, you're proving why you think Donald Trump is intentionally allowing a recession.
Yeah, he's intentionally causing a recession so that we get a bunch of the excess out of this. Well, this is what it seems to be the case. To get a bunch of excess out of the system to reduce the gap between the rich and the poor, to bring inflation down, and then later on begin cutting rates, QE, the whole thing.
I'll be honest. I want that gap.
With the higher.
I want that gap between the rich and the poor to be as wide as possible. Get me away from those poor people.
All right, so let's hear what he has to say. Scott Bessent, Treasury Secretary Bessent, has to say about the Trump call.
On the upside is if we have good policies, then the markets will go up.
He says he's not watching the stock market very closely. Are you?
I watch everything, but and
okay. What's the Bessent put? I mean, you are going. You know how the media covers things, and we're down 6% on the S&P. From what you read on a daily basis, it feels like we're down 60 at times, although the Nasdaq is down in correction territory at this point. I'm just wondering what if we ever went down 20% on the Nasdaq or 15% on the S&P. With people that want Trump to fail, that's going to be splayed across every newspaper in the world. I'm just wondering whether the tolerance for something like that for the administration.
Well, look, as you said, Joe, the market was up 20% last year, 20%
so there is
the year
some house money.
No. I'm going to put it another way.
Okay.
Did the Biden administration succeed? The American people weren't buying it just because the market was up. They voted out the Democrats.
Question related to the regulatory or deregulatory agenda, which I think is part of what you're arguing on a long-term basis is going to help the economy. There's two things that I'm fascinated by. One is that it sounds like the FTC, at least, and the administration is thinking of trying to extend or at least be very similar. I mean, that's to what the Biden agenda was before. I don't know. And that was sort of some of the commentary about sort of what the next version of regulations look like, which surprised me. The second thing that I was surprised by was actually mergers and acquisitions activity in the month of January, which I would have thought would have been up, but actually was down 30%, as if January was back in 2015, and what that says about the confidence to the extent that you believe that M&A activity is a barometer of confidence.
Well, Andrew, MAGA doesn't stand for...
All right. So
Wait, MAGA doesn't stand for what?
M&A gradient. But I think
it's a
that
wonky jump. Don't worry about it.
uh,
Let me just jump over here 1 second.
I was like, is this guy gonna make a joke? He seems like such a stiff. He seems like a jolly stiff, but
that this economy that we inherited starting to roll a bit, sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
wow,
Detox period.
wow, wow.
Right?
This is coming from a government official.
From the Treasury Secretary.
I've been
Right,
waiting
and then-
to hear stuff like this for a long time.
That's right. Let me play this last part over here.
What degree they have put up barriers against us, and if they all will collect a lot of money, and we will make the system fairer.
Couple of things. I think you've made the point that unlike the printing of too much fiat currency, which might be an underlying cause of inflation, the tariffs don't cause long-term inflation. They could cause some price increases, but not long-term. But then at the same time, you said that Americans don't necessarily just want everything to be really cheap. They want our workers to be employed here. And that the prosperity here doesn't mean being able to buy cheap goods. It means being able to live the American dream through having a job and having a future, et cetera. So we're going to have higher input costs forever.
So what, higher input costs forever? No, it's the tariffs are a one-time price adjustment, and everything else the administration's doing is, we're not getting much credit. As of yesterday, energy prices were down 15%. Crude was down 15% since Inauguration Day. 10-year rates are down, mortgages are down. The spreads between the 10-year rate and mortgages have come in. So we saw we saw mortgage applications pop up last week. I think if we can keep on that trajectory, and Joe, the American dream is to be able to buy a house. We can't import houses.
But this could all be a reflection of the economy
Well, that's what I was
slowing
going to
down.
ask. As an investor,
There we go. This all could be a reflection of the economy slowing down. All right. So everything he just described, the idea of labor supply, well, what he's talking about here is the slowdown of the economy in order to allow the worker to catch up. But the only way the worker catches up is if those who are ahead, the 1%, the 10%, get a pullback. So he's like, well, is the economy rolling over? Sure. And he's talking, this matters because of the wealth effect. The wealth effect of the higher stocks go, the more that the people who have stocks have money to spend. And so he's like, well, we got to rein that in. But in all this sort of like wonky talk of, look, the pain that's going to be suffered by people is by you guys. It's by the top. Right? And that's what they're talking about. They're not talking about the Joe Blow at the gas station working. That's not what he's. His prices are going up. Look, his life is terrible Monday to Sunday. I don't know what to tell you. But they're like, but the middle class and the wealthy, most of the middle class, we're going to feel the pain. And he's like, yeah. I mean, we can't import houses. So we got to bring down prices. We got to bring down yields. And the only way to do it is with an economic slowdown. So that's from Bessent's mouth, a nice case for it. And I just want to play one last.
Just before you play that, do you get the sense that those anchors talking to him, I get the sense that they're like, wait, we're getting honest, straightforward answers for the first time in a long time. Don't want to scare him, but want to get some more. Like, they look like honest students. Like, the teacher opened up the secret book and is telling us the truth about what's, like, they have this energy about them that's like, wait,
that
hang on.
interview is one of the best. It's 40 minutes long. absolutely worth watching, and they go over all kinds of different subjects. I can't believe this guy, man, what he says about Ukraine. I mean, everything is just amazing. I can't believe he's talking about it, and they even extend the interview. Like, can you stay a little bit
Yeah,
longer or
I can
whatever?
tell.
I was blown away.
They look like, oh my God, I can't believe we're getting this right now.
That's right.
It's a good sign.
All right, so let me switch. This is not too long. This is the National Economic Council Director Kevin Hassett, who's asked again. So he makes this point. Just listen to what he says about bringing down inflation.
The thing I could say, Joe, is that the president understands that if you want inflation to go down, which is one of his highest, if not his highest priority, incomes the first couple of years under Biden dropped $2,000 per person after going up $6,000 per family under President Trump because of the inflation. So he wants inflation under control. To do that, you have to increase supply and reduce aggregate demand. So you got to cut spending and you got to increase supply. And the way you increase supply is you lower the marginal tax rate on labor and you lower the marginal tax rate on new investments. And so for labor, if you look at the people who aren't working who really want to be, it's people who have really ridiculously high Social Security tax rates. If we've got somebody who can work more overtime, that's increased labor supply. That helps them make a higher income and it helps reduce inflation because we have more supply. So President
Okay, so that's all code for you, Peter. I'm sure it's all like.
No, I understand. They want to reduce taxes in the right areas to incentivize growth in those areas, and I guess they're going to raise taxes or something in others.
Don't worry about the specific things they say they want to try to do in order to do it. The goal, what they want, is increased labor supply and reduced aggregate demand. Right? This is like when the Fed says, well, in order to bring in, inflation under control, we're going to have to have the unemployment rate tick up. Wait, so you want people to get fired? We're going to need some people to get fired in order to bring inflation down. That's what they mean. And so in order to increase labor supply, that means more people have to come on the market to work, and you need some people to lose their jobs. That's the only way you can increase labor supply, right? And so you get stuff like deportations, you get stuff like a bunch of programs, a DEI or whatever, they cancel government firing thousands of people from the government so that the labor goes into the private sector, and now you have a bigger pool. And what happens there is that, well, the labor, they have to bid, right? So they have to be able to accept lower wages in order to get the job because it's
You flooded the market.
all the guys want to get the girl at the party. So and then at the same time they want to reduce aggregate demand. Aggregate demand is the demand for to consume across the nation.
Yeah, bring that down.
You want to slow people's consumption.
Bring that down. What does that increase savings? Is that the point of that?
No, what that does is that it reduces the upward pressure on prices. So if 10 people want an iPhone or whatever it is, 10 people want an item, then the item will be a certain price. If only 3 people want that item, it goes down. If only one person wants it, they can have it at whatever price they want. And so by reducing aggregate demand, you reduce the upward pressure on prices, and by increasing the labor pool, you decrease the pressure on labor. The price that labor gets paid, you reduce that. And there's also less spending, right? That has a double effect, and the more people who are unemployed, the less they're going to spend. Well, that's what a recession is. That's literally what a recession is. Increased labor pool and lower aggregate demand. That's what it is. And they tout the crude oil came down 15%, and it did over the last couple of since the beginning of the year, since Trump got elected. Oil is down 15%. Now, I'm not against recessions. That's not what I'm saying. I'm not against recessions. What I'm saying is that that's what they want. They do want a reduction in growth. They do want the economy to slow down until they can rejigger. They want to switch from the public sector to the private sector, and then we get a ramp up. Pretty interesting.
And a smart move, right?
Give me a second. I want to close the blind. Go ahead.
Well, I think it's a smart move. I mean, I'm not an expert in the economy or anything like that, but I do know that just juicing the economy and easy money, fast money, and all this stuff is probably not a good policy. That there has to be some type of responsibility coming back into play, at least temporarily. I really love the language of short-term pain for long-term gain. Because when I look at any other field in society, that's what I see. I see short-term pain, long-term gain. And when you look for the easy route and the painless route throughout everything, chances are you're going to be ending up in a situation where you're making bad decisions and doubling down on those. So I'm all for it. It's kind of like the conversation with tariffs on Canada. One, I did not know we had such a high trade deficit with the United States. I know you have opinions about the trade deficits, but um, I would like it if Canadians supported more locally and there were changes done to the economy. If you could stand on your own 2 feet, I don't know if
You
it's
think so?
possible.
You
Was
think you'd
that?
like that? You think you'd like that?
Yeah, why not?
There's trade-offs.
Yeah, there are trade-offs, but I think a sovereign existence is better than subservience to.
Yeah, but you get less choices.
Yeah, you get less choices, but so
The
what?
mic you're using, you can only get the mic that's made in Canada.
Don't
And
care.
if it's not as good as the other one, well, that's just what it is.
Don't care. There'll be other options. Don't care. I've been trying to figure out what's going to happen with these tariffs, and this is going to go up and that, and I won't get that. I don't care. We need to. I think countries need to rejigger themselves so that they're relying more on what they have, and people need to calibrate themselves that no, you shouldn't have every option and everything that you want all the time. There has to
I,
be options. That's what produces creativity and innovation. Not we get everything for cheap from China. No, we need to be able to make things ourselves. We can't have the slaves and the serfs make.
right, but I come at this from a completely different angle. To me, it's like I don't care about what should or shouldn't be. For sure, this was always going to be the eventual outcome. Either a planned transition, understanding these forces that are arrayed against us, or the system collapses and you're trying to figure it out, pick up the pieces afterwards. And so to me, I'm just glad that, this Ron Paul flavor has showed up where they're like, okay, let's just take it on the chin. And there's even if they're just jawboning, they're saying, "Hey, let's get productivity back on the table. Let's clear out deficits. Let's rethink our economic alliances. Let's figure out what's going on because the status quo was a train headed right over off a cliff. So that's all I really care about. Like, what's the trade here, right? And the trade is this inevitable thing is happening. And so to me, the best part of this is that Peter, you can make the most amount of money in a recession. Did you know that? It's a drop of things that you can make the most amount of money. But second to that is out of the recession, right? If you could have bought stock at the bottom of the dot-com bubble, at the bottom of the GFC, you'd be laughing right now, right? And so the idea here that this drop that we're expecting to see is planned. It's just like the crypto conversation we were having earlier, that you have an opportunity now in order to make quite a bit of money, right?
Is this why
Even
Warren Buffett went to cash?
that would be the argument, buy lower. And so there's a bunch of people, and this is why I care so much about working with traders posts and people in the markets. I just find it so important for people, if you're not exposed to the markets, you're not going anywhere. Okay, unless you have some idea and you start a new business or whatever. If you're working at McDonald's and you don't have any exposure to the markets, either crypto or equities, what are you doing? To me, that's absolutely crazy. And then the knowledge necessary in order to understand what's a good move or not, understand how the dollar moves, understand how policy affects the growth of a nation, understanding inflation. If you understand these things, well, then you can make decisions that are far more intelligent. In the same way that you're not going to go to a 2-year technical school in order to learn how to program for the Atari. Like, you're going to make different decisions because you understand what the future might look like. And so I think it's super fascinating that the government right now seems to be telegraphing what they're going to be doing, and that means that after the recession, they're planning on new all-time highs. I mean, that's the plan. Whether that happens, whether we get stagflation, I don't know, but that's the plan. And when I see the liquidity indicator showing that liquidity is going to start coming in, start in April, and it's just rocketing upwards, that to me is that's Bitcoin at 250,000. That's buy your AI stocks now. That's buy things that are on sale. So I just wanted we're going over time. I have one last story. that I wanted to touch on. But before we do that, I just wanted to end with just the final nail on the coffin here for what I think the pitch for they want a recession is that you might say, hey, Tom, all that is well and good that the Trump administration wants a recession, but what does the Fed think, right? So hear what they say about inflation.
No audio.
Oh, no audio. 1 second. Did I share the wrong thing?
Secondly, I think if you look, and I talked about this at Jackson Hole last year. If I look back and it looks to me like what you had was a global burst of inflation everywhere at the same time, and it largely you got to look at global factors, and it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought. It really was. We had in mind the recovery from the global financial crisis, and instead we got this really high-powered response, expansion, recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. And it was also all of the supply stuff that was happening. That took longer than we thought to unsnaggle. And we'd never seen it before. We knew in real time that it was going to be really hard to get that right. But so those two things created inflation globally. And
so that's just the opposite of what we're just talking about. He says what caused the inflation was tight supply, massive demand. And we just heard it from the NEC director. What they want is loose supply and lower demand. They want a recession. All right.
I did want to say one thing very quickly on that. I always thought for a president to do the right thing when it comes to the economy like this, like allow recessions, allow pain, you have to have a president who's willing to be unpopular and unliked, which I think that's what America might have right now.
That's why they're calling him the next Nixon. Let's see how that turns out.
Well, let's hope not like Nixon.
Before we jump into our final segment, let's take a moment to shout out Traders Post, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, Traders Post connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. Traders Post, because your strategy deserves to run at full speed.
Nicely
My
read.
favorite part about the ad reads is that Traders Post never asked me to do it. I was like, hey, let me do a little ad break here.
It's a smart move. I think so.
It. All right. So for the final story, have we reached the market bottom? With the dollar falling, implied volatility dropping, and liquidity rising, some analysts think a massive rally is on the horizon. Peter, what if I were to tell you that Bitcoin can reach $250,000 by summer?
What? No. Wait. Okay. Bitcoin right now is at 86.3.
Right.
You're saying it can get to 250 by July?
By July, yeah. By July.
But I thought didn't we just do a whole thing about because recession, then liquidity pump?
Well, the liquidity has already started pumping. So here's the funny thing. The way recessions work is that the recession in the economy happens, or the recovery of the assets, of risk assets, crypto and equities and all that, happens before what happens in the economy. Like basically, the markets front run the recession, and so markets can actually start going up while the recession is just now hitting Main Street.
Yeah, you told me one time that job loss is the last step in the recession, although it might be perceived as the first step by the population.
No, in the series of things that could happen that leads up to that, it starts all the way with procuring of the basic materials in the supply chain, all the way down to manufacturing, to refinement, to wholesalers, to retailers, and then to you and me are retail. And so when the unemployment rate ticks up, more people are out of work. Like all that has already happened before, and it's the last sign before a recession starts.
Oh, I see.
Yeah, so it's the other way around. But I just wanted to play something from Tom Lee. This won't be a long segment. Let's see here. So this is Tom Lee, famous investor. Like him or hate him, he has his things to say. Let's see what a lot of people respect him.
You've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I mean, I can understand why investors are sitting on their hands. I mean, they don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment, and then something like today, we got a bad ADP jobs report, and the market's actually up. So we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with that? I mean, it's one thing for CEOs to be a little skittish, be a little more cautious. I mean, that's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
I mean, yes. In my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near because if the economy's near stall speed, I think people realize the Trump put does come back because otherwise it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in.
All right, so we've been talking about for a couple of months now that the window of weakness that Ken Carson talks about, which is period between February 20th and March 20th, is this window, this quarterly OPEX period, where if a catalyst happens, you can get a massive drop within the markets. But barring that, there's usually enough liquidity or enough liquidity and vol supplied that allows for the markets to suffer bad news in stride. Right, so this constant buying of the market that's happening for various reasons, funds, passive investing. There's all this mechanism where this indiscriminate buying of the market, not because they want to, just because it happens automatically, that stops or fades within these 4 periods of the year, and then so if that stops, then you can have a drop. But other than that, you get this upward move. So he's saying over here that he believes that basically the lows are in for the markets. He's not seeing a 50% correction on the stock market. I also wanted to 1 second here. We talked about before how the dollar is falling, and that'll take about we're going to see a liquidity injection over here. Let me just share my screen real quick. You're seeing here on the Christensen liquidity indicator that if we I offset liquidity by 78 days. And you can see this is Bitcoin, a chart of Bitcoin. You can see how pretty accurate. Let's hide all these other lines. All right, so you can see how pretty accurate it can be, where this is liquidity. I mean, tell me that's not basically 1 for 1 for these things, right? Up and then up and then down and then down and then sideways. So basically, we have this liquidity coming back in around April of this year, and it's a rise of liquidity up to match where we just were to 100,000. So my expectation is that we blow to that we maybe stay a little bit sideways, maybe head down a little bit lower to 74,000, and then we rocket up after this window of weakness, March 20th, to either the same high or all-time highs. And the idea here is that as the dollar keeps falling, this should continue to go up. And when we take a look at the dollar, right? The dollar has broken lower. I mean, it shows no sign of stopping until we get down to the 100 mark. So we have another 40% of the drop left, and that's more than enough liquidity down the road in order to buoy markets. And take a look at like where we are in markets. Like if we take a look at Nvidia, fine, it's down. This is AI, right? Nvidia chips, we're down 30% off the top. But we look at stuff like HIMS. HIMS is down. 1 second. Yeah, HIMS is down 50% from the high. We have stuff like Victoria's Secret down 60%.
These are all buying opportunities.
Right. So if you're going to buy these things at all, maybe not Victoria's Secret, but if you're going to be buying these things at all, like now's the time to get them, right? It's at these moments that you want to buy these stocks. So that's pretty interesting. And finally, if we take a look at, pull this up real quick. If you take a look at implied volatility, which is how 1 second here. Implied volatility is the implied risk of what will happen to an asset in the future. So the higher implied volatility is, the more people think that something bad could happen in the future. Let me just pull this up. If we take a look at Tier 1 Alpha, they're talking about how this is a skew, volatility skew, and it's basically saying the higher this is, the more that there is worry about the markets around that time. So this is March 9th we're talking about over here, and this in the future, April. So it's saying that, hey, if we get past this period here, this March to March 20th, this is what I was telling you about before. If we get past this period and no big catalyst happens while liquidity is low, then chances are we're not going down, because over here the implied volatility is low. Does that make sense, Peter? Like you sort of need a bunch of people who are not positioned, they're not safe, they don't have any insurance, so that when a catalyst happens, they have to chase. They got to sell their assets really quickly. They know how far it's going to go. They have to buy protection, and you get this exacerbation to the downside. But if you are insured, you almost make more money on the downside, right? On options, you can make sometimes 10 times more money on the downside. And so then you end up with more capital as the price falls. People monetize that and then put that money right back into the market, and you get this V up, the shoot back up, like we saw in COVID, Volkswagen, and all these different times where the price just skyrockets. And so time is ticking. It's March 7th. Let's see what March 20th brings around. But liquidity is increasing, and inflation's coming down for a bit. It could be a catalyst to a big move up. Now, I think after that, my whole pitch is that we're going to see volatility like we've never seen, and we've already seen that, is that after that rise up, we get that's where the real recession begins, and we get just a massive drop. I think Bitcoin tops, and we come down to the cycle low, which I believe is something like 30,000. I haven't checked on it recently. So you want to sell at the next the next high, and then after that recession, while we're in there, you want to be buying, because over the next 10 years, you might really clean up. That's my pitch.
I want to do something here. Thank you for that, Tom. I want to do something here just real quick, okay? There are 3 topics we talked about here today. Bitcoin as a strategic reserve, is Trump planning a recession, and have we reached the market bottom? So I just want a clean, very short, I'm going to ask you, what's the trade for each? And you tell me what's the trade, all right? I'll append it, or we'll do a clip for this. All right, so Bitcoin as a strategic reserve, what's the trade?
No trade at the moment for that. You want to wait until we get a drop in markets, and then you want to buy Bitcoin and the altcoins mentioned hand over fist.
Is Trump planning a recession? What's the trade?
Yes, you want the basically short dollar at the moment until around 100, and then you want to cover because you can expect a big bounce in the dollar. And if that happens, then you start buying the assets that you've been waiting for, including crypto.
Have we reached the market bottom? What's the trade?
I think we were near a short-term bottom. So between here and 74,000 on Bitcoin, you buy, and then you sell anywhere between 100,000 and 250,000, depending what the momentum is like.
All right, that's great. Look, After Hours is not just about market commentary. It's about figuring out what to do with that information. So I really wanted to make sure we got what's the trade in there. Tom, phenomenal job. Learned a lot today. This is really great. You got something else on your mind?
No, just want to remind everyone that we're here every Friday for After Hours at 4 p.m. We want to bring the news that that matters to you. We want trades to be there. It is really important to me that you understand this information, that it just wash over you, and then it helps you decide what you want to do in your life. Even if it's not being exposed to the markets, it helps you decide: should you quit your job? Should you start a new business? What should you tell your kids to do as they grow up? All this is super important, and education for the markets to me is basically an extra year of university. It's grade 14. It's something everyone should be doing.
Fantastic. Well, that's great, everybody. If you like this type of content, remember to like and subscribe. It's very important, and it helps us know what you like, and it helps the YouTube algorithm know that this is worthy content to be shared. There's office hours on Tuesday. Blueprint, if you haven't seen Blueprint, you definitely want to check that out. Coding, live coding that happens on the air. Lots of episodes for you to go check out there. That happens on Thursdays. After Hours, like Tom mentioned, is on Friday. And we got a new series coming out called Long and Short, Automated Trading 101, introducing you to a lot of these ideas, concepts, and how to get you from starting with TradingView to getting your first trade on Traders Post, the world's premier, the universe's premier automated trading platform. And I've been here temporarily, but your wonderful host, Mike Christensen, will be back with Tom next week. Is that right?
That's right.
Awesome. This has been a lot of fun. Tom, you did it.
That's great. It's been nice to see you, not Mike. You're doing a good job. All right, folks. Thank you very much.